Today we learn about the basics of accounting. In terms of accounting, we deal with something called double entry system of bookkeeping. When we define the double entry system of bookkeeping, what is it about? The double entry of bookkeeping is a particular method which says there are two things in an organization. One is the debit side and the other is the credit side. So everything works as per the two sides which they state as LHS and RHS. So everything is based upon these two concepts of LHS and RHS. But how do they exactly work upon this? That is something which we'll learn today. I'll do the basics here today in the upcoming classes when we'll deal it in detail. Then we'll look forward to more of exercises and the detailing of this particular concept. Okay, before we move forward, let's understand one important aspect of accounting there. Uh, okay. In terms of accounting, we have 2 points. One is debit side and the other is the credit side. This is what we have learned over the period of time. The double entry system was introduced to the business world by an Italian merchant named Luca Specchioli in 1494. We have studied about this. So when he did that, it was basically something which was perfected in England, and then other European countries had formed it. So it started with Italy there, but it went to England. The England people, they did that particular level of working towards it in a better way, and then ultimately it went to Europe, and American gave another set of way of looking at it. So that has been more or less a way where multiple things had been aligned to look forward towards the era of accounting. So what we are going to deal with is single entry and double entry. That is what we have learned in the past few classes. Number one is single entry bookkeeping. Single entry accounting is that accounting which is cash based. Number one, it is cash based means yes, sir. It just started just now. First is the earlier or the primitive system was whenever you receive cash now, only then you record it. That is, whenever we receive cash, that is when we record it. And when we talk about the double entry bookkeeping in terms of the other scenario, that is when we look forward to it from the point of view of double entry bookkeeping, they said, no, let's do a system called accrual system. There's a difference between cash basis and accrual basis. Cash basis talks about only and only receiving of money, and only then we record it, while the double entry bookkeeping was more of a sane method. There we have two methods. One is accrual cash basis. Again, if you receive cash, only record it there at that point of time. Otherwise, you can also have when the things become actually due, record it as per that due system as well. They look forward to the entire area of accounting in two ways. One is the cash basis, the second one is accrual basis, which means the when the thing becomes due, then we record it, right? Okay, so here comes the next point. The various approaches to accounting. This is one of the most confusing areas. So we'll be picking up the basics of this confusing areas today so that we can understand it in detail. But by the time we start with the full-fledged classes, we'll discuss this point of view from another level as well, because the nature of accounts is one of the areas where maximum number of the beginners who are looking forward towards accounts for the first time, they face trouble. So that's an area which we'll be looking forward to in detail. Okay, now what are the various approaches to classification? In terms of accounting, there is one more thing that we need to understand. In terms of accounting, we talk about accounting as a process under which we look forward to recording the transaction of an organization, right? So if you're looking forward to recording a specific kind of transaction, how do we record it? It is based upon the fact it is an approach to classify accounts into various methods. One was the traditional approach, also called the Britishers approach, also called the it is called the Britishers approach, which is also called the golden rules of accounting. So there are three names for this particular approach, right? That is what we look forward to in terms of traditional approaches. That is something which the Britishers started with, and then Americans came in and on an honest note, if I have to tell you, I find the American approach an easier way of understanding accountancy. So I'll let you know the same thing from both the point of view, because in the examination more of the questions have been asked from towards the area of traditional approach. So in every now and then the examination has been asking questions from the traditional approach, so that is why it is important to do that. The second one is the modern approach, which is the American approach. So there are two names for the modern approach, while there are three names for the traditional approach. But why am I just telling the names? We need to look forward towards what exactly these approaches say now. So let's look forward to that prospect as well. In terms of traditional approaches or the British approach, we look forward towards traditional approach, British approach, or what we call the golden rules of accounting in a different manner. How do we look forward towards this area? Okay, in terms of this accounting system, actually, before we look forward to that, there is one more thing that let's talk about it. In terms of the golden rules, they talk about accounting under the prospect of 3 points, actually two. One is when they talk about personal accounts and impersonal accounts. When we define these two different types of accounting, they talk about the accountancy from the point of view of an organization in such a manner that they are doing the accounting portion from the point of view of one where it deals with persons, the second one when it does not deal with humans at all. So there can be 2 points. One is dealing with humans, that is personal touch, and the second one is not dealing with humans at all. So these are the two basic methods which they use in terms of accounting currently. When we talk about persons like you and me, if we talk about the accounting from the point of view of okay, if we are dealing with the bank, that's also a person. If we are dealing with a company, it's also a person. If I am dealing with a human like me, if you talk about Wing Niharika Wale, I'm also a person. But is a partnership firm a person? It is also a person. So they define the entire accounting from the point of view of whether you are dealing with persons or you are not dealing with persons. For example, expenses and incomes are not personal accounts, right? That's not something that deals with humans. If I paid for a particular thing, all I remember is what I paid for. I won't be worried about anything else, but what I paid for is the obsession that I'd be having in my mind. So in terms of accounting, they use two kinds of methods. One is personal, the second one is impersonal. Okay. On the basis of this, when we talk about this area, one is the personal account. Personal account. Accounts are basically what? How do we define the term accounts? Accounts is basically an individual item that we look forward towards in terms of accounting. In terms of accounting, they have given individuality to each and every transaction or element of transaction. That is what they define as accounts. Then they defined accounts into two parts. First one, they defined as personal. The second one, they defined as impersonal. When they say that accounts are personal, then what do they call it? Number one is natural, second one is artificial, third one is representative. Okay. So, in terms of accounts, it has been defined as personal account, which talks about you and me. If we talk about natural human beings purchasing something, natural human beings selling something, that is what they define as natural, right? If we talk about Ram, if we talk about Sham, if we talk about anything of that sorts, that is how they define the term natural. When they talk about artificial, it's about banking company, it's about banking company, or you can say any partnership firm. any limited liability partnership, LLP, any cooperative society, any of that sorts is defined as an artificial account. And the last one is called a representative account. Representative personal account deals with, okay, if I have some outstanding expenses I'm supposed to pay to someone now, we call it outstanding expenses. If I have paid someone to someone in advance, I'll call it prepaid. If I have received in advance, I'll call pre-received. Right? So anything it call if I have to receive money from someone, it would be called accrued income. Okay. One is outstanding expenses. When the expenses are yet to be paid, they are called outstanding. When the income is accrued, when the income is not yet received, accrued income means income not yet received. Then the next point that comes here is accrued income, outstanding expenses. Sometimes we pay in advance, which is called prepaid expenses. When we have paid in advance, and the last one would be pre-received income, or income received, or income received in advance. Till the time the till the time we haven't given the service, till the time we haven't given received the service, it's all about one fact. It's about I have paid someone money, I'll receive money from someone, I am supposed to pay to someone, I am supposed to receive from someone. So the entire accounting is so limited to the fact that I owe to someone, I'm going to receive money from someone. So it's not about whatever what was the nature regarding that particular, whether it was an expense or an income. The fact was I either have to pay to someone, that someone plays an important role there. So representative accounts are those accounts which deal with these four elements, whether you have to pay to someone. So it's not about whether the expense that you are bearing, it's about you are owing money to someone, you have to pay to someone, that someone becomes more important. So that's why they call it personal account. So personal representative accounts deal with all the outstandings, all the accrued, that means that is you are supposed to receive is called accrued, all the prepaid or received in advance. Why? Because an outstanding rent, here the important element is that rent is still outstanding. We are supposed to pay to the landlord. So the landlord becomes an important element, not the outstanding term, right? So not the rent there. So rent isn't important. The fact is I am supposed to pay to someone. That someone is more important. That is how they define the term representative. So this is representative account. Next is impersonal. Impersonal is something that doesn't relate to the persons at all. That includes real and that includes nominal. When we talk about real account, it says that it is of two types, tangible and intangible. Real account is obsessed with assets. Do you remember what exactly assets was? Can anybody explain what exactly an asset is? An asset is something that helps me to gain money. Asset is something that helps me to generate money. That is how we define the term assets. So all the assets are covered under real accounts. And how do they cover it? Number one, if it can be touched, we call it tangible. If it cannot be touched, we call it intangible. So the real account is of two types, tangible as well as intangible. While the other form of impersonal account, so all the assets are covered here. Okay, do you remember we talked about assets, we talked about liabilities, we talked about incomes, and we talked about expenses, right? So we have talked about all of these, but what exactly are we dealing with? Okay, let me just simplify the entire accounting to you and then I'll come back to the slide. We call the entire concept as Cradle. C for capital, R for revenue, A for assets, D for drawings, L for liabilities, and E for expenses. So this is the entire accounting in terms of the six major pillars. Capital is the money which I invest into the business. Revenue was the income that I earn. Assets was the thing through which I actually receive money because I'm generating my money now. So it would be assets. And when we talk about drawings, this is my personal, if I take out money from the business for my personal use, it's called drawings. Then if I owe to someone, that's a liability, it's a burden on my head. And the last one is expenses. Okay, so in terms of accounting, what happens is one of the basic ways of learning is we talked about capital. Capital is something that deals with the human, so it went with the personal account. Drawings is something that also deals with the human who takes out money from the business for their personal use. So when the personal thing comes, it's also personal account. Liabilities we owe to someone. That means if I owe money to any of you, for example, I can see so many names. So let's look forward to Mr. Ashish Srivastav. So we can say that one particular person named Mr. Ashish Srivastav. So I owe money to you, sir. That is what I know at this point of time. I am owing money to you. It's not about owing, it's about I have to pay you. So I need to note down your name. For example, all the bankers look forward to, if I come to you and I ask you that I need a bank loan, so what will you do? You'll note down my name, you'll ask me that what are your ITR returns, show it to us, what are the documents that you're looking forward to, give us all those documents, and then we look forward to it. What is it about? It's about noting down the human's name. So all the liabilities that we find would end up with the person, so that is also something they defined as personal account. So 1, 2 and 3 out of the six major elements of the accounting, three went to the personal area. Then what are we left with? We are left with revenue. Okay, just now we dealt with assets. Assets were defined under which account, everyone? Please go ahead and answer. The term assets deal with which particular account? Correct, I'm getting the correct answers. Number one, it is impersonal. It comes under impersonal accounts, and under impersonal accounts it comes under real account, right? We just studied now. Okay, this is where we talked about real account. And okay, anybody who hasn't done accounts before, please note down these four terms. I'll just repeat it for you. Number one, outstanding expenses, the amount which we owe to someone. That is outstanding expenses. For example, outstanding rent, outstanding salary, any of those. Then accrued income, the income which is not yet received is called, excuse me, accrued income. Then we have prepaid expenses. What are prepaid expenses? Prepaid expenses refer to those expenses which are paid in advance. So for them, for us, it would be like an asset. Oh, we are supposed to pay to someone. But then it is related to a person. So it is always covered under representative. Under traditional approach. This is all pure traditional approach. I'll tell you how to look forward towards both these approaches. Then any pre-received income, when any money is to be paid, to be received, it's more about that human to whom we are paying. That is why it comes under the personal account altogether. So when it deals with the pure assets, tangible, for example, building, for example, building ho gaya, then we can talk about the equipments that we are using. Then any of those related to the cell phone, even that is also an asset to us because through it we earn. That is also there. Then it can be tangible or it can be intangible. So both of these things are covered under real account. So if all these two accounts are done with, right? So we are done with the personal account, we are done with the real account. What are we left with now? The last one is called the nominal account. So when we define the nominal account, how do we define the nominal account? The nominal account says all the expenses and all the incomes. Both of these are covered under nominal account. all the expenses and all the incomes are covered under nominal account. So the entire cradle, can you see? The entire term cradle has been taken up by different elements of the real, personal, and nominal area. Is this absolutely clear, everyone? Please let me know if there's any point of error that you would like to ask, or any specific example that is on your mind and you would like to ask, whether it's real, whether it's personal, or it's nominal. It becomes easier if you ask questions, because you never know what kind of questions would lead towards more clarity, right? So is there any question till now, or is this done? Because then I'll start with the basic testing area as well. So before I move forward towards that, I would want everybody to be more interactive there so that we can actually understand it in the best possible way. Okay, then let's understand it using these terms and terminologies. Okay, when we talked about the debits and the credits, why were we exactly learning what kind of debit and what kind of credit? We were learning the golden rules of accounting. First step was to disintegrate the entire accounting system into real, personal, and nominal accounts. But why was this? How is asset different from a revenue? Okay, now that is a very good question. This is what I've been asked many times. In terms of layman language, this is a very common question. Okay, let's talk about this, ma'am. Okay, I just bought a car. Through that car, I'm someone who has their cab systems, right? I give my cars on rental basis to people so that they can earn, and then whatever they receive, they give me my rental as well. So I earn through that particular car. That car is basically my asset, and whatever income I receive because of that car is revenue. If okay, right now I'm teaching you using certain equipments, right? I might be having a laptop, I might be having the tools and equipments, I'm having a mic and everything else of every sorts. This is my asset, this is not my income, because I don't earn by selling this. I need this to earn money, right? If you need an asset, now considering the fact this is under a point where I'm a businessman, right? If we talk about the layman language, it would be being a businesswoman. When I'm earning, that is what we'll define, that this equipment that I'm using, this is an asset, and whatever I get out of it, if I'm doing software work, if I'm doing some accounting work, if I'm doing the teaching work, whatever professional activity I would have done, that is through this particular asset. So through this asset I make my income. I don't sell this asset, because if I sell it, then how will I make money? It's like you must have heard about that particular. There is a particular hen that lays eggs of gold. Now that hen that lays those golden eggs, that is an asset, and those eggs which that particular poultry farmer would sell and generate money, that is what they define as the asset, the income, because he's going to sell that good and generate money for himself. But the day he cuts that hen down, what will happen? Just the day he killed that particular golden the egg laying hen, then no more revenue. So asset is the reason that you earn revenue. Is this concept clear, everyone? So whenever you get stuck with assets and incomes, now always think of that hen that lays golden eggs, the eggs of gold. There's a very well known, that's a folklore that basically it's a very old story that used to go by my family there, or even you would have heard it in your childhood as well. It says there was a particular poultry farmer who had got a particular hen which lays eggs of gold. So one day he becomes very selfish, and then he thinks that if it lays eggs of gold, if I kill her, then maybe I'll get a good amount of gold out of her. If I kill her after killing, that I'll take that out. So the point was, he had to give that particular hen life, because it was generating egg for him every single day. So that is what we say, that if I earn a lot through my asset, then I have to use that asset every day. If I sell that asset, my income also goes away. So the day he killed that particular hen, he found nothing inside her. So the money was gone, and so the hen was also gone. So no more generation of money. That is how we can define assets and revenues. Is it clear, everyone? No problem. And kindly note this down with in within your notebooks only, because if you remember this particular story, then it would be easier for you to differentiate between assets and incomes. The point is, income goes into a different account, and the asset goes into a different account altogether, right? So assets went to the real account, and incomes and expenses went towards the nominal account, while all the persons, like they gave money to the business, the capital and the drawings and the liabilities, they are all a part of the personal accounts because it deals with humans. So anything, if you receive money, right, from, it is from the point of your business. Who gives money to the business? He's the giver. That is called credited the giver. Capital is always credited. Always remember, C for capital, C for credit. The point is, we keep capital in the credit side because he's the giver to the business. The businessman is the giver. Then if he takes money out of the business, he is a receiver. So drawings goes here. D for drawings, D for debit. At the same time, if there's a debtor who is receiving goods from us, then he'll pay me later on. So debtor is on the debit side. If the debtor is on the debit side, where's the creditor, everyone? If the debtor is on the debit side, where's the creditor? Now, when we talk about the real accounts, so always remember, debit the receiver, credit the giver, and the creditor is on the credit side. Debtor is debit, creditor is credit. Half of the accounting is something that you don't even have to learn. You just have to correlate things. Rather, whatever tricks I'm telling you in terms of learning the various concepts of accounting. See, in accounting, there's nothing called rectification, or we can say there's no cramming. There is no rote learning that I'll always suggest you. But there's one point. Let's understand that point very clearly. When we were kids, we learned that 2 multiplied by 1 is 2. We learned the format now. We learned the basic tables. Now we know every multiplication and division, how it goes. In terms of accounting, it goes the same way. First of all, we have to learn. We have to learn what the exact format is. Then, with that particular thing, once we start with our full-fledged accounting, now you'll realize it's connecting the dots. Whatever we did, it is like connecting the old dots. Okay, this we did that. This also is something that we did, and now the complete accounting forms the picture. But before that, you will have to learn those basics of accounting. And while doing that basics of accounting, best ways, note down the term cradle. Best ways to note down whatever I'm saying should be credited, should be debited. For example, D for drawings, D for debit, right? And D for debtor, debtor is debit side. That is why he's an asset. He is receiving the goods from us. Someday he'll pay me back. That is how we define it. That is debit the receiver and credit the giver, right? Then with the real account, it is basically debit what comes in and credit what goes out. In terms of assets, so whenever you feel you are overwhelmed and you are not able to get something out of accounting there, always follow the cash. When I receive money, it is on the debit side. I receive money, it's on the debit side. When I lose money, it's on the credit side. Debit what comes in and credit what goes out. That's the basic accounting system we use. That is, whatever money we receive, it should be always on the debit side. And whatever money goes out of the business, it's called the credit, what goes out. So always follow money. If it comes in, keep it on the debit side. If it goes out, let it go towards the credit side. This one particular system will help you to decode at least 40 to 60% of your accounting entries in journal. If you remember, whatever comes in, it's on the debit side. Whatever goes out is on the credit side. An asset. If I purchase an asset, okay, let's purchase a particular thing here. Okay, let's look forward to this pen. This is basically not a normal pen now. This is basically an equipment that I'm using. So if I purchase this pen, what am I losing exactly? One thing. This is an asset through which I make money. So this is an asset. So if I keep it as an asset, what do I lose when I buy this asset? What do I lose, everyone? Because I don't get anything for free. Go ahead, answer everyone. Correct. That means in terms of if I receive this particular pen, I am losing cash as well. Now I lost good amount of cash and only then I bought this pen. That means I got pen, debit what comes in and credit what goes out. What did I lose? I lost cash. So that loss of cash would be on the credit side. So note it down. This is one of my ways. Since I depends upon you. If you learn the bilingual manner as well, so that's one of the basic cracker code that I always give in case you understand Hindi. So then you can actually note it down in Hindi as well. That is something that even I used to let my students know. Whatever simple language you understand, irrespective of the language that you might be knowing. If you know any specific language of your area, if any of your dialects, then you can write it in that way. For example, Hindi, in Hindi I always write जो आया वो debit, जो गया वो credit. This particular thing has helped me when I was a beginner. So if you can learn it that way, whatever dialect you understand, whatever your vernacular language is, kindly note it down in your language so that it helps you to understand that in accounting, whatever cash you receive is always on the debit side. Whatever the amount goes out of your business goes on the credit side. This particular thing will help you a lot. So every time I'm repeating it, learn it. It will help you. Now the cash is done. Now the personal accounts are done. The assets are done. What are we left with? In order to earn money, I just don't need this particular equipment that I'm using. This equipment will not only help me. Now I need a Wi-Fi. I need lights. I need water. I need the basic needs are definitely required when I'm looking forward to the class, right? Electricity is required, water is required, Wi-Fi is required, and none of these things are free. That means I will incur the expenses in order to earn income. Now, the point is money magnet. In order to earn income, you have to make some expenses. So, the expenses went on to the debit side and incomes went on to the credit side. So, debit all the expenses and losses and credit all the incomes and gains. Whenever you get time after the completion of this class, you have Sunday with you, you have an entire day to look forward towards whatever we did in this class. Please go ahead and do this particular topic again. This will help you in terms of understanding the further classes, right? In terms of nominal account, it is debit all the expenses and losses and credit all the incomes and gains. Now, what does it help us? Let's understand it through this particular example. In terms of personal account, the first point that would be there is introduced capital into business. Every journal entry, think of any journal entry, any transaction, I can divide it into two parts. There's never one part. Any journal entry that you can think of. For example, goods purchased. It is goods came to you and cash is gone. Sir, at around 8:15. In case there would be anything that you would be losing now, in case you were not able to, okay, anybody who has just joined or couldn't join earlier, please go ahead and look at the particular class, understand the particular concept, so you have time by Monday. Let me know if in case you'll be having any kind of doubts. We'll look forward to those doubts before the class and then we'll start the class, right? So that you will be sorted with those. Okay. Now, in terms of introduction of capital into business, now if I introduce capital into business, what will happen? What is coming into the business? There are two elements. Every transaction that you can think of now, there are two elements. Now I introduced, first of all, the business is started. When I start my business, what will happen? The business will get cash and the business will have me as the proprietor. That means I am the giver. Where will I be? On the debit side or the credit side? As per the personal account. Personal account says debit the receiver, credit the giver. So I am on the credit side, but my name will never be there. It's like you'll always find it like that. Businessman is not known by his name, he's known by his capital. If there would be multiple businessmen, A, B, C, D, they are forming a firm, then you'll write A's capital, B's capital, C's capital, not by their names, but by their amount. So we have two elements here. Introduced capital into business. Capital is a personal account. So debit the receiver, credit the giver. The giver is the person who gave money to the business. So he would be on the credit side. That's the personal account. What is the nature of cash, everyone? This is basically an entry which has both the accounts, personal account and the real account. There is nothing like only one particular element would be there in every transaction. We can have multiple accounts. Introduce cash into capital. Cash is what? Real, personal, nominal. What account is it? Kindly go ahead and answer. It doesn't matter if it's wrong or right. The most important thing is you let me know whether you're able to understand the topic or not. That's one of the most important element of live class. That you feel free to connect. Ankit sir, correct? Nageshwari ma'am, correct? The correct answer is real account. Now, automatically the things will fall in place. You'll always have one debit and one credit. How do we look forward to it? When I started my business, it is cash is the debit account and capital is the credit account. Does this mean that I got 10,000 into the business as cash? Now my capital is also 10,000. The debit side is equal to credit side automatically. Is there any contradiction in this particular role? In terms of chemistry, we would have many exceptions. Accounts has no exceptions. Till now, I've never seen any specific account which relates to one particular thing, but in an exceptional case, we take it towards the other side. No, the exact nature remains the same irrespective of the journal entry. If the capital is increasing, it's always on the credit side, because in accountancy we cannot do that. If we write capital and then we say no, it's reducing, let's cut it up and write the new capital. If one plus is there, in order to nullify, you'll create one minus so that both the journal entries are visible to us. So if I introduced capital into the business, there were two accounts. One was debited and the other was credited. If I apply the rules of accounting there, cash, debit, what comes in? Cash is coming into the business, it's on the debit side. Capital, debit, the credit the giver. The giver is the person who gave money to the business. So both the accounts had used, one was debit, credit the giver, and one used debit what comes in. Any of the accounts mix and match can be used. Ma'am, Monday, 8. Right? So that is how we define the personal accounts. Now, payment made to X. I made a payment to X. He's a receiver or the giver? From my side, he is a receiver or a giver? We have got two elements now. The payment which is made to X, one is X and the other one is cash. Two elements. Correct, sir. He's a receiver. He's receiving money. So anybody who's receiving money, it is debit the receiver and he is receiving money. Money is going out of my hands or is coming into my hands. It's like it is, I'm losing money. So it would be credit. What goes out? It is X will go on to the debit side. This is application of the account. It is on the debit side. Cash would be on the debit side. X would be on the debit side and cash would be on the credit side. Basic transactions. What if I payment received from Y? I received money from someone. What would be on the debit side and what would be on the credit side, everyone? Go ahead and try it out. Everybody, please go ahead and try it out. I would like to know that whether you are able to get it or not. Just the basic purpose there. If you have got this particular concept, then kindly answer. Payment received from Y. I have received money from Y. What would be on the debit side and what element would be on the credit side? Correct, sir. Think about it. Cash is coming inside. So I've just told you whenever cash is received, it is always on the debit side. Correct. Getting the correct answers. Please go ahead and feel free to answer because that is something that will help me to understand whether you are able to get it. I'm getting the correct answers. Thank you so much for being there. Now, let's talk about the answers as well. And anybody else who would like to answer, I can read your comments. So please go ahead and answer as well. It would be cash is received from Y now. So I'll write cash and Y. Debit what comes in. That is what I've told you. 90%, at least 40 to 50% journal entries will have cash. So one of the areas sorted. Whenever you receive cash, one side is sorted. Whenever cash is going out of your hand, it is also sorted. So there would never be a problem. Yes, sir. We are using multiple account systems here. Cash is basically a real account, while Y is a personal account. We are using multiple rules there. But I'll tell you, you can use it naturally even. While sleeping, even you can be correct in your entries. That is something that can be applied if you understand the system of accounting in a better way. At this point of time, I don't need to apply. I think I didn't even apply the rules in the very beginning. Even the moment I cracked the code, since then I have never used debit what comes in, credit what goes out. No, I need to think of debit the expenses, credit the income. I stopped doing that altogether. I'll tell you that particular trick as well, through which you can use the system altogether in the best possible way. Otherwise, at least for the next 3 4 months, whenever you will be dealing with accountancy, you'll have to read these golden rules. Okay, when we say cash, always remember cash received debit side. So one element is sorted, the other element is Y. So take it on the credit side. You don't even have to think about personal account. If you know where the cash is going, the second element is always sorted because any journal entry will never have two debits or two credits. There would be always one debit and one credit. If you know both the elements and you are done with one of the elements that this is for sure on the debit side, then what is the repercussion there? The result is the answer. The next part would always go on to the credit side. If you know one particular thing, the opposite is always known to you automatically. That is what the level of accounting you need to reach on to so that you can answer the questions in the best possible way, considering the fact you will be having negative marking. So you have to assess the questions very deeply. Okay, now question. In both the questions, there is only and only assets coming in and assets going out. So now all I need is an answer from your side. If I said furniture purchased with cash, if I purchase furniture with cash, what are the two elements and which element should be debited and which element should be credited? Furniture purchased with cash. Got it, sir. That's correct, Ashok, sir. Correct. Go ahead and answer, please. I would always want that we have an interactive session so that you feel free to contact with me whenever you have a doubt. All you need to do is formulate into a sentence and that's it. Correct, ma'am? Now, there are two elements. One is furniture. If I purchased furniture, even if I buy a pack of chips, whether it is of hardly 20 rupees, I still have to pay now. That is me. That means I got a pack of chips and I lost money. So I have got furniture and I lost money. Always follow money. If money comes in, debit side, money goes out, credit side. Money is done. It is on the credit side. So the second element, even if you don't know about it, you are sure about the answer. Here, furniture is also an asset. So if it comes in, debit side, if it goes out, on the credit side. Correct answer, everyone. Now, if I sell this furniture, what would happen? I get money and I lose my furniture, right? So it would be like cash comes in and furniture goes out, isn't it? So the cash is on the debit side and furniture is on the credit side. All I'm looking forward to is what comes in and what goes out. I don't even think about real account. I'm not right now thinking debit what comes in, credit what goes out. No, I'm thinking about just the basics. If cash is coming in, on the debit side, if cash is going out, it's on the credit side. That's one of the basic thoughts that will help you to crack the code. Even this particular rule, real account, if you know the real account now, automatically you'll be able to answer. Okay, now comes the nominal account. This account, the real account, is again going to help you here. Okay, the first point, it says stationery expense paid. What do we do with it? If I paid stationery expenses, what do we do with it? Now, stationery expense which is paid, I received money or I lost money. Just because I get a pen, I lose money, na? Just because I get something, I'm losing money. That means one element is definitely the expense of stationery. And the second expense, the second thing that I need to note down is the movement of cash. Whenever you get stuck, whenever you are not able to find the answer, always follow the cash. You'll always get the answer. Money comes in, money goes out. If money is going out, clearly it's on the credit side. Now think of it. Now I can say nominal account says debit all the expenses and losses, credit all incomes and gains. A very beautiful way of explaining the entire part. If it helps you that way, then kindly go ahead with it. Write it down. Don't leave it on the fact that we have learnt it. Always note down these facts. Because on the last day, when you will be in a panic, you know that you will never go wrong. Correct, Shweta ma'am? All the answers correct, ma'am. Now, in terms of stationery and cash, we are done with it. Now look at the next one. Salary paid in cash. Now we are losing it now. We are losing cash. So when we are losing cash, I don't care what the next point is. One thing is I've lost cash. Now that is something which goes on the credit side. Now I can think of, acha, there is the other part which is salary. Salary is an expense. है ना? That means we can note down salary and now I can think of debit all the expense and credit all the incomes. Even if I don't have the time, I know there are two elements. One element is cash and I know about its position. Now it would be on the second part. If this trick helps you, then kindly go ahead and try this trick. I'll give you more and more exercises in the upcoming classes. Whenever, okay, Vidul sir, basically what we do is, I hope I'm taking your name correctly. In any case, whenever we are looking forward towards this area, na, whenever we receive money, it's on the debit side. Whenever we lose, it's on the credit side. Whenever we lose money, it's all the tracking system. Whenever you receive, you're always there like, oh, I've received money. It's on the debit side. Whenever you are losing it, you're always worried, oh, I'm losing money. So you're always on the credit side. In terms of accounting, you'll always find debit is always kept higher and credit is always kept lower. So you can learn it like that, because obviously rote learning will not always be helpful there, but you need to understand what is debit and what is credit. The rule says, if I receive money, I'll always be happy. I'll be on the cloud nine as soon as I receive my salary. Whenever I lose my salary, I'll always be disheartened. So, debit side and the credit side. So, whenever you receive money, it's on the debit side. Whenever you lose money, it's on the credit side. That is how the entire account is being prepared, sir. Whenever you lose money, it's always on the credit side. There is no exception. Thank you, sir. Now, moving on to the last point, the commission is received. Commission is received in cash now. So that means cash is received and we have a commission as well. Now, which part should be debited and which part should be credited? There are two elements now. Cash is received because we are receiving commission. Because whenever you'll be asking me that, ma'am, why did you receive money? I'll tell you that I received money because it was a form of commission. Correct. Go ahead, everyone. Please answer the question. Always track the cash, and now you know the answer. If the commission is received, cash is coming in, and commission is to be noted there. Correct, everyone? It is cash is on the debit side and commission is on the credit side. Just think of one element. You'll always get the other element done with. Now, are these real personal nominal accounts absolutely clear, everyone? Because in the examination, there are many questions which are there. Yes, sir. Commission is received in cash only, na? If we are receiving it, if the question doesn't specify, it's always in cash. If they'll specify, then it can also be received in bank balance as well. That is another bit. We'll be talking about this bit in our classes. Okay. Is this real personal nominal account absolutely clear, everyone? No doubt in it. So let's move on and understand there's one more approach. This is a simpler approach, but in the examination, more questions are asked from the traditional approach. That's why we did that approach first. It's like the conventional way of learning, and this is the modern one. It says, as we have learned, do you remember? I just bought a laptop. Okay, this is my laptop through which I'm earning. Now that's my asset, but I bought this laptop by using my own money. So maybe the laptop costed me 1,20,000. Now, if it costed me 1,20,000, out of that, 80,000 was my own money. Then I required 40 more. So what I did was I took a bank loan. So that is a bank loan there, a very impractical example, I know, but then this will help you to understand. In terms of the liability, I took a bank loan for 40,000. I think that would go under personal loan now. So in this case, what will happen is capital is on the debit side, capital and liabilities will give us our assets. The basic accounting equation that we did was assets is equal to liabilities plus capital. Whatever asset you build up, it's because you take your own money into it and then also you borrow from someone. This is what the modern approach of accounting is. But how do they look forward to it? They have a very simple system. Okay, this is what we did was Cradle. Do you remember the term Cradle? Cradle. This is a difficult way. This will, you can keep it in your notes. This I think this particular class, in this particular class, you'll also get the PDF, right? So kindly go ahead and review it. Now the point is Cradle. When we talk about the term Cradle there, can you see in terms of Cradle, C for capital, then L for liabilities and R for revenue. CRL. These things decided we belong to the team credit. Whenever we are to be increased, whenever there's an increase, always take us towards the credit side. See, capital, whenever increases, it's on the credit side. Revenue, whenever it increases, on the credit side. And liabilities, whenever they are increasing, on the credit side. That's one of the basic rules they say. And they say assets, drawings and expenses, all these three things will always go towards the debit side. See, assets debit, drawings debit, and expenses debit. You don't have to learn what will happen towards their decrease or whatever will happen towards any other element. Always remember assets, and assets is on the debit side. Then liabilities through which we buy the assets is on the credit side. Capital is on the credit side. Whenever capital is increasing, any liability is increasing, it's on the credit side. While whenever an asset is increasing, it's on the debit side. Asset, then the next point that we have is right, drawings on the debit side, And the last one is our expenses on the debit side, while incomes is on the credit side. If you learn this nature, even that will also help you. This is also another way of learning it. That depends upon you. How do we learn it? This is how you can learn it. That is LRC, or you can also learn it LIC. This is one of the ways through which you can learn this term. Various tricks, I'm telling you. There are multiple ways of learning these things. So, whatever way suits you, kindly note it down in your notebooks accordingly so that you remember those tricks. LIC, when liability is increasing, income is increasing, capital is increasing, it's on the debit side. Or whenever it is decreasing, it's on the debit side. And whenever these are increasing, on the credit side. So the best way is, I don't remember this part at all I remember is whenever LIC is increasing, it's on the credit side. Whenever assets, expenses and drawings are increasing, all we call aid is increasing, it's always on the debit side. Just remember the initial nature. The second nature would automatically be learned by you. If you learn this part, that is it. If you learn till this part, next everything would get connected once we start with the accounting system, especially when we start with journal. The entire thing that I have told you today will make sense. Let me tell you how. We just learnt about, okay, I just sold a particular furniture to you now. Okay, I sold furniture. I sold furniture. Furniture sold. It had two elements. One was furniture, the other one was cash. Is the cash increasing or decreasing, everyone? Is the cash increasing or decreasing? When I'm selling the furniture, is the cash increasing or decreasing? It's increasing. Ashok sir, I'm getting the furniture now, or I'm losing it. I'm losing it. If I'm losing my furniture, I'm getting cash from you. So it's something that is increasing. As per ADE, assets when increasing are always on the side of debit side or credit side? Always on the debit. Whenever aid is increasing, it is on the debit side. But I'm losing another furniture now. I'm losing my furniture. So what do? I'm losing furniture. It is again an asset that we are losing. If an asset is being lost, the original nature is debit. So the opposite would be, if I'm gaining an asset, it would be debited. When I'm losing an asset, then automatically it would go on to the credit side. So furniture is going towards the credit side. Crux or gist of the entire class. Always remember, debit what comes and credit what goes out. This particular thing almost fits in almost every entry. I'll tell you how, and how can we connect it when we start with journal. Just remember this term for the moment. When we'll be dealing with it, you'll be able to track almost every entry by using this basic terminology. Though this is not the exact rule that they have given, but this is a cracker code. I hope today's class was clear to everyone. Please let me know if there's any doubt. This is where the section ends, but before I end it, I would like to know if there is any doubt that you would like to ask, or any random example that you would like to ask, that what is it about? No problem, sir. Nominal account says expenses and incomes. If expenses are being incurred, it's always on the debit side. Expenses and losses, whenever I'm incurring the expenses, it goes with the assets. It's like a sibling of asset. I got a car. If I have a car, I have to arrange my petrol expenses as well. Both of them are always on the debit side. Whenever I am losing money, it is on the credit side, right? So whenever we have an expense is basically debited, and incomes, if whenever I'm receiving income, I'm on the credit side. Whenever we pay, have you seen it? Okay, debit is always on the higher side, credit is always on the lower side. One way of learning it, whenever we are paying someone, we have an authority, will always be like, I am paying you money, so I have the right to receive that service. That is an expense. Expenses are always on the debit side. Whenever we receive money, we basically we take our hand out, right? So it's always on the credit side. You become humble when you are receiving, so it's on the credit side, right? Clear, everyone? That's a simple way of learning. Find your own ways, make your own tricks. And in case you find something really cool, then let me know as well. Because these tricks are helpful. Because accountancy is not something that you had been doing for years, but you need to learn the formats at least. Those formats will take you to places. Okay, is there any other doubt, everyone? Please let me know. Any specific thing that you would like to ask? Okay, so before I end the session, let me give you some examples because that will give me the clarity as well. Stationery is a real, a personal, or nominal account. Stationery expenses is a real, personal, or a nominal account. If I get a pen and I use it within a day, or rather, you'll always find that the teaching faculty will always be involved with noting and making notes. My markers don't last even for a month. The best markers that I get. So, what do I call it? Will it be my asset or an expense? It's an expense for me. So, if it's an expense, it's a nominal account. Calculator can be called an asset. In certain areas they are using calculators as an assets. There are certain people who say that this is a consumable. Again, accounting is an art. Everybody looks at it differently. Now, if I say I have a building, so building is real, personal, or nominal? Building is real, personal, or nominal? Correct. It's a real account. And if I say L's loan, I took a loan from L. So you can say loan from L. What will it be? Hint, L is a person. Correct. It would be a personal account. And if I say, okay, goodwill, what is goodwill then? Real, personal, nominal. What is goodwill? Goodwill is an intangible asset, so it's a real account. Yes, goodwill is the reputation of the organization which it gains over the period of time. Okay, so this is where I would like to end my session. Thank you so much for being there. We'll be dealing with the next level of, rather, we'll start with the ultimate accounting from the upcoming class that is on Monday at 8 p.m. So kindly be there at 8 p.m. for the next class. Until then, there's a little homework. Once you get the particular recording, look for that particular PDF as well as the basic detailing that will help you to understand the concept properly, right? So go through the particular details before our next sessions. Once we start with it, this will help you a lot. And make your own notes as well. So the last day you'll never be stuck up with the fact where from exactly which particular place I should study. So you know where to start studying. Okay. Thank you everyone. We'll be meeting on Monday at 8 p.m. Thank you. Good night.